Hi, this is Mike Mock with the Lansing Trade Group. I've got the post-report comments here just after the WASDE USDA report on Wednesday, November 9th. We were surprised today with the aggressiveness of the uptick the USDA provided us in terms of yields for both corn and soybeans. In the case of beans, all the way up to 52.5. It's just amazing. We've never had a yield above 50 bushel, and now we were projecting a yield of 52.5. The government won't revise this again until the January final, but we feel that we've probably got most of the good news in the yields in at this stage. Again, some real aggressive numbers, not only in the northern plains, but also in the eastern corn belt. But given the the information we're getting from growers, we really can't argue with this number. What's disappointing or a problem for the grower in this environment is the government has already been very aggressive with U.S. bean exports. The crush number is still high, although the government did reduce that just a smidge today. The problem that we have then is with consumption more or less capped out, the fact that we've raised the crop size so much, the extra production actually falls right to the bottom of the balance sheet. So we go from a 395 million carryout, which is certainly adequate, all the way up to 480 million, which is burdensome. So as a response, we got the bean market down 23 cents late in trading today. The situation in corn also surprised. We'd had a couple of months here where the corn yield had ticked a bit lower. The government saw substantial increases, particularly in the northwest part of the belt. Iowa went up, Minnesota, Wisconsin. But the real surprise, South Dakota up 3 and North Dakota up 17 bushel from where we were in the October report. So the yield jumps back above the 175 level. Again, also a record. And with demand still projected at fairly high levels when you look at ethanol and exports and so forth, the carryout now moves north of 2.4 billion. So again, this is just a reminder, in addition to wheat, that there are plenty of bushels of feed grains and oil seeds in the northern hemisphere, and now it almost requires some sort of problem in South America. You can't rule that out yet, but if we're looking for higher prices, it's going to have to come at the expense of some sort of global problem somewhere else. So from the grower standpoint, we've been locked in kind of sideways trading ranges. Recently we had tested the upper end of the range, December corn near 360, the January bean futures north of 1030. Now we're in the process of checking out the lower ends of those ranges. And again, particularly with old crop, we think growers had to be cautious here given the report data we got today. What we like to do in this situation is seek out our best basis opportunity, particularly with most of the crop tucked away. If we can get an opportunity to sell an attractive basis level, then maybe consider re-owning a portion of those sales with some upside call features and bet the South American weather potential problem that way rather than having too much unpriced grain in the bin. The other thing that we'll be talking about in the weeks ahead on the video is the situation in new crop. Obviously, with such strong yields, and we're seeing improvements in technology. It'll be interesting to see what the government gives us in March. Actually, there's an Outlook conference in February as well, where they'll talk about new crop yield potential for next year. And obviously, we don't know much about the weather going forward, but don't be surprised if the trade starts to use a 169, 170 kind of estimated corn yield for next year, and something 49 to 50 in beans. Again, that makes it, again, the farmer has proven on a global basis how capable he is of producing large crops if the weather cooperates at all. And again, today's report just drives that point home. Now, we also have lots to watch with the macro markets. Obviously, the election of President Trump, he'll be our 45th president here in January, presents some issues too. We had very volatile outside markets today. Potentially there could be some issues there, but the dollar was very strong today. Equity markets, after a rough start, finished strong as well. So we're going to have to watch where money moves, where the fund speculator managed money likes to put their money. We'll see if they're disappointed with today's information from WASDE, and if they perhaps back off their investments in agriculture. So again, we want to urge caution in the old crop. We like selling into basis strength, using re-ownership programs with option features rather than a lot of unpriced bushels in the bin. And we're beginning the process as we lock in cost structures for next year, ideas about acreage for next year, that to see if we can look at some floor pricing in the new crop as well. That's all I've got for you now. We'll talk to you first thing tomorrow. Have a great day.